Frank Holmes, CEO of U.S. Global Investors, is back to give us an update to his forecast. Frank, 2 weeks ago we spoke. You were talking about gold hitting $4,000 in a couple weeks. You were talking about Bitcoin. You're giving us a more or less positive economic outlook. Where do you stand today? We're second week of January. Lots has happened in the political and economic arenas. What's your outlook now?
I remain very bullish, and I'm so happy I got my vaccine today. And that means 21 is going to be phenomenal. It was an incredible experience. It was like driving through Tim Hortons. You just had a long lineup of cars, and it took me a little over an hour and a half, and bingo, done. Go back February the 4th to get my second shot, and then I'm free to fly. So I'm just really proud of what the municipality did, the U.S. military were doing, the fires, the whole fire department was there with engines, machines. It was an incredible logistics simplicity to watch. It was great.
Were a lot of people there in your municipality?
Thousands, just all so organized like a symphony as cars came through waves and they were orchestrated and moved around by police on motorcycles and in their lineups and separating. Phenomenal experience. Besides getting and feeling good about it, I think that's good for the economy. That's why I bring it up. More important, yes, I feel good about it, but really most important, so many Americans are getting the vaccine, and it's so good for economic activity.
Do you think businesses will open up soon? I think you told me offline you still need your second dose to be able to travel, right?
February the 4th. And friends of mine, my chairman, the vice chairman was just in for the first time. He got a second dose this week, so he came into the office. Everything's going well from that end of it. There's still lots of fear and trepidation, so everyone has to wear a mask and be 6 feet apart. But I think people are adapting to it, and people are back at school. That's what's really important for kids. And the highways are not as busy as they were a year ago, but it's good activity.
I've been talking to some guests, economists who are still bearish on the stock markets. Now I know you're bullish. Here's their case they're making. Well, there's a few arguments here. One is that any sort of economic bounce back we're going to get is artificial. It's all going to be just pumped up by stimulus. It's not real. So the stock market can be brought down to reality. If you look at sentiment, we're actually beyond 1987 levels of euphoria. So that's not sustainable. The other argument is bankruptcies are going to continue to happen. And we haven't seen the end of bankruptcies yet for 2021. How do you respond to all these arguments?
Yeah, there's lots of bankruptcies, and that's sort of tragic for a lot of restaurant businesses and small businesses. But I think this economic engine, people just don't realize in America how diverse it is economically. All these different engines are going, and just the can do, get people back to work, get people back, kids to school. It's just a real dominant drive. And so I think it's an attitude that they have to get the engines going again, which is very pervasive, rather than shut down and lock down and everyone become fearful and we don't know, and there's lots of boogeymans out there. The U.S. is pushing around Casper the Friendly Ghost. So that's the way I like to look at it. And the real concerns we should all have as a quant is that the 10-year government bond went above 1%. When gold hit the highs back in July, August, the 10-year government bond was 50 basis points. Inflation was running at 1.2. It was a big negative rate of return. Inflation is now 1.3, and the 10-year government bond's a little over 1%. So that creates the sell-off in gold, but I think it's short-lived. This government is talking about $2 trillion stimulus. They're just going to stimulate, and the same thing in Europe. They're going to use monetary policies, everything to drive the economic engines. And what I'm very bullish about is going to be green. It's green, green, green. Anything that's going to be, and a lot of greenies don't realize you need mining. So nickel's important, lithium is important, palladium is important, platinum. If we go to these new types of batteries, and silver for solar panels, everyone loves solar panel companies. Well, they've been great performers. So these alternative sources of energy. So I think, it's a pretty bullish scenario.
Why do you think the 10-year yield went up, Frank? Is it correlated with economic growth expectations? Is that why?
Absolutely. This fourth quarter is going to be a blowaway quarter. It's just going to be great numbers. Yes, 20% of the S&P cut their dividends, and they're in a sort of a spiral down, and they're having all their problems. But I think a lot of the energy problems and that sort of cleansing of the energy sector is behind us. Oil's backed up to they're at a rebound. I know here in South Texas, they're hiring back. Frackers are going back out. So I think that the negative pervasiveness will be short-lived.
I just want to remind the viewers that you have been bullish on the stock market since, well, we've been speaking, you and I, since, June, July 2020. You turned out to be correct. A lot of market bears have been predicting the opposite. Why didn't we get a bearish outcome, Frank? If you could just pinpoint it down to a few reasons why we didn't see a stock market crash by the new year. I've heard a lot of legitimate reasons as to why that would happen, and it didn't happen. Were you surprised that we didn't get a stock market crash?
Well, remember, we always like to talk about government. We believe that government policies are a precursor to change. So we simplify it. Monetary, fiscal, they're the two big engines. The politicians have the fiscal policies, and the Federal Reserve has the monetary policies. Those fiscal policies are taxations and regulations. Under President Trump, we had nothing but deregulation and everything for fiscal stimulus. And then under Powell, we had everything but monetary stimulus, with coming in and driving down municipal bond yields, driving down corporate bond yields, dropping interest rates for banks down to next to zero. These are all really important functions. There's a massive stimulus of trillions of dollars. So consumers got checks. The costs are rolling over for municipalities and for states dropped, so it wasn't a burden on them. This is an incredible stimulus, and it's showing up in those companies that have been able to pivot the most quickly to participate in it. And the stock market was speculators came in because there was no sporting. So all those gamblers and bettors, they all started following options. So we had a huge explosion in option trading and speculation. And then we had the millennials discover the market, and they're all playing different stocks. And my own experience there is particulars with JETS ETF, where the volume went from 35,000 in March to 3.5 million. Assets went from 35 million to 3.5 billion. And that particular product is up 60%. So there's lots of people betting on a positive future. The vaccine has been critical in maintaining that momentum. So this vaccine is like a monetary stimulus.
Wouldn't a vaccine be bad for stocks? I'm just thinking of just the other side here, because if people are back in business, the economy is doing well, the Fed doesn't need to stimulate them anymore now, do they? Wouldn't that be bad for risk assets and gold as well?
It takes a time. It's just going to take at least another 6 months before that vaccine gets permeated throughout the system. And we'll see with jobs, but the job numbers were negative. So if job numbers are negative, that's good for bonds. Bad news is good news for the stock market. That means more stimulus. That means rates coming down. So I think that we have to recognize it's the G20 countries are doing this in a synchronized fashion. They're all using modern monetary policies and theories to try to stimulate economic economy. And it's going to be very green. Europe has already done $1 trillion towards green infrastructure investing, with lots of policies for that. Biden is pushing for that. So I remain very bullish on anything that's related to a lower carbon footprint. And we've done that for our global resource fund. It crushed the indexes because we had switched to got away from the big oil names and went to the alternative energy sources for global resources. And those stocks were on a tear.
Are you at all concerned about Biden's tax policies? I think he wants to raise corporate taxes, also capital gains taxes. Will that weigh down on investments, do you think?
Yeah, that's no doubt that will hurt corporations. But a consumer tax is more significant to spending an economic engine. So I think that taxes no doubt will create a sell-off. Everything will turn bearish. But I think that President Biden realizes that they didn't win by a wide margin. It wasn't a slam dunk like President Obama. This is very marginal close, and so therefore their policies have got to be very careful that they keep the mainstream, that the real swing voters come back and they stay voting. Well, raising taxes, slowing down the economy, they'll lose faith quickly. I think they're going to use monetary and fiscal policies, do everything to stimulate economic growth.
So stimulus was the main driver of the stock market rally in 2020. Is that still going to be the same narrative for 2021? Stimulus will be the main driver, or is there something else too now?
Government policies focused on Global warming, focused on green energy, focused on anything that has a lower carbon footprint, electric cars, anything that's digital. I think things like data centers are on a tear. Data centers used to trade at 3 to 4 times cash flow. Now they trade at 10 times revenue. Or not 10 times cash flow, but 10 times revenue. And that's why Hive Blockchain went to make this acquisition, trying to finalize it to buy 50 megawatts of power in New Brunswick. Why? Because the data center business is becoming much more attractive because the world's becoming more digital. We take a look at Catherine Woods and her ARC ETFs. They went from 3 billion to 20 billion in assets. You had all the rocket companies explode because of some narrative she talked about. She's going to start an ETF for going to space. Anything that goes to space, anything to do with the digital world that can impact any type of consumer product or consumer company, they're going to benefit from this.
So you mentioned, how do you play green energy? You mentioned some base metal like copper, and what else can investors do?
Well, copper, nickel, platinum, palladium, where are the discoveries, who's bringing them on, the value of a project coming on. Like I love Robert Friedland's project. Ivanhoe Mines has platinum in South Africa and has a huge high-grade copper. So I think that Ivanhoe Mines is an inexpensive stock, and I think the Chinese probably in 21 take it out. They just buy it out, and because they're going to need this copper for this huge green movement. We have supply restrictions coming out of Chile so easily, any type of a supply side. And we talk about Bitcoin. It's so classic. Bitcoin had this final big move at year end. Well, they had this supply. Let's say there's producing around the world gold, 100 million ounces a year for simplicity. What do you think would happen to gold if they cut it to 50 million ounces of supply annually? Gold would be 10,000. And so what we're seeing in that crypto space of all this monetary money's going into crypto. And I think that to me is also fascinating as the digital world grows.
You know what we should do? Why don't you start a green energy ETF? I think that would be very popular. Have you thought about that?
Yes, there's a couple of them. There's quite a few in the U.S. alternative energy ETFs. There are.
Well, green economy, you can extend that to metals as well, whatever you think fits in that bucket.
Yeah, I think the big wave is going to be DeFi. Decentralized finance is going to be a big digital boom. And the idea of coming out with a crypto coin backed by silver, gold, or type of trading with it. I know that some of the companies we've invested in are doing LNG trading, a hedging model in Singapore using blockchain. That's how this world is going to evolve, where there's an overlap. So at US Global for resource funds, we have investments where there's a technology being applied to that resource sector. And owning stocks like the Chicago Chicago Mercantile Exchange is highly correlated to commodities. So commodity boom is usually very good for their earnings and their business. So you have to look at the resource sector differently.
Yeah. All right. Well, if you launch another ETF or investment vehicle, let me know. We'll talk about it for sure. Absolutely. Thanks so much, Frank, for your update. I look forward to catching up with you again soon.
Happy investing in 2021.
Thank you. And thank you for watching Kitco News. I'm David Lin.